Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about BlackBerry stock, ticker symbol BB. What I want to do first is I want to go into Google and try and explain to you guys why I think BlackBerry is really a re-rating story right now. And then I want to go into the earnings report to try and compare BlackBerry against its competitors, and then I want to go into the trading charts to see if there's a level or two to buy BlackBerry stock if we want to buy BlackBerry stock. So now let's get started. So here we are on Google, and here's a one-day look at BlackBerry's chart. And we can see that in just a single day, we are up a nice 5%. So if we look at the news or what's going on around BlackBerry stock, of course, some of these people are still talking about Reddit and WallStreetBets. But now what I want to focus on is what this announcement was, which is the announcement of the pretty cool HyperVisor 2.2 software and how it implements with EVs. For me, this leads me to the main point of the video. I don't really want to talk about the technology of what's going on in the HyperVisor, even though it is pretty cool. The main point of the video that I'm trying to make is that I want to talk about a possible re-rating of the company's valuation. In my other video on BlackBerry, I talked about the EV partnerships, the AWS deals, and the patents that BlackBerry has to leverage growth for the future. BlackBerry is really trying to reposition itself as a data company and an Internet of Things company. They are aggressively trying to get into the EV game. I won't go over this again because I've already talked about this before, but the main point is that BlackBerry has some fundamental bull cases that could cause analysts and investors to reevaluate this $7 billion market cap here. In the earnings report, we'll see that BlackBerry has a yearly revenue of about $1 billion. What that means is that when we calculate the price to sales ratio for BlackBerry, we are only sitting at a 7 price to sales ratio. If we look at this Market Beat article here, we'll see comparisons that they make between BlackBerry and other companies. Now, I believe that this data is a little outdated, as some of the numbers that they say don't really match what I'm seeing in some of the earnings reports from some of the companies, but the concept is what's important here. The main point I want to make is that if we compare BlackBerry to its competitors, we are trading at an extreme discount in terms of price to sales. Now, to be fair, there are reasons for this extreme discount, which we'll talk about later in the next section of the video. But the main point is that BlackBerry is trading at an extreme value compared to the others in the same field when we're talking about price to sales ratio. Even if we double BlackBerry's price to sales ratio here to 14, we will still be at an extreme discount to a majority of its peers. Now, I'm not saying that BlackBerry is worth double its current price to sales ratio. That's up to you to decide. That said, normally a re-rating takes time. Now, BlackBerry is kind of a unique case study because it has gotten rounded up in the WallStreetBets momentum game, so this re-rating could happen faster than usual because a lot of eyes are watching BlackBerry right now, probably for the first time in like 10 years. For what it's worth, I am bullish on BlackBerry because of its re-rating story. I think a lot of people out there think of BlackBerry as that old company that makes those phones that nobody uses anymore. I think that a lot of people are underestimating BlackBerry's position in the data and EV space. As I've said in my previous video, BlackBerry has reached a deal with XPeng, one of the hottest EV stocks out there right now, and also reached a deal with Amazon Web Service for BlackBerry Ivy. I think BlackBerry is trying to throw everything, including the kitchen sink, to reinvent its business, and that's bullish for me because honestly, I don't think they can survive in the handheld phone business. When you're up against a $2 trillion company like Apple and your market cap is only $7 billion, you are literally less than 1% of Apple's market cap. You can't compete at a poker table if you bring $1 and the rest of the people at the table have $100. The probability that you will win is quite small, which is why I think BlackBerry is trying to find other avenues for revenues besides handheld phones, and they are doing the right thing by trying to sign contracts with EV companies like XPeng and Amazon Web Service with the BlackBerry Ivy. But again, this re-rating story takes time, and right now we are sitting at a 7 price to sales ratio, which again is much cheaper than our peers. So let's talk about the fundamentals of BlackBerry to try and answer the question of why investors have been discounting BlackBerry the past few years. So here we are in BlackBerry's most recent earnings report here, and again, we've already gone over this last time, but we're going to go through things that help us directly answer the question, why is BlackBerry trading at such a low price to sales ratio compared to its peers? Whenever you see deals like this, when a company is trading much cheaper than its peers, I think it's always good to be skeptical. So let's try and answer the question, why is BlackBerry trading at such a low price compared to its peers? So let's only compare BlackBerry to Splunk for simplicity, mostly because they were compared in the Market Beat article that we saw earlier, and because Splunk is a securities and data company, which is kind of in the same niche as BlackBerry. Now, I know this isn't a great comparison, but you could do the same analysis to other companies that you think are better comps, and I think that you'll come to the same conclusions as we will here. The main points I want to make here are operating losses and legacy of the business. Let's talk about operating losses first. We see here in BlackBerry's statement of operations, the operating losses, which is this row here, for the 9-month period is $800 million. So that's how much we're losing by just operating the business. So if we look at the balance sheet here, which I pull up in a different tab so we don't have to scroll, we see that really the amount of accessible cash that's easy to liquidate for BlackBerry is about $1 billion here. This is compared to Splunk, where we are losing about $700 million in operating losses, but we have about $3 billion in easily accessible cash to use. Now, this is not really a terrible thing and end of the world here, and this is also kind of hand wavy, but you just have to keep in mind that BlackBerry is burning through its cash, faster than its competitors. This means that they need to see a return on investment sooner, which means that it is inherently more risky. This increased inherent risk is likely reducing the valuation of BlackBerry in some people's opinions. Now, BlackBerry can probably, of course, raise cash and capital by doing things like secondary offerings or something, but that's just something you have to keep in mind. As a legacy company, people are expecting this old company, which was created in 1984, to be in a much better position than it is in today. Which brings me to the second point here, which is the public perceptions of the company's legacy. Public perception plays a big role in the company's valuation, and honestly for BlackBerry, the perception has been quite negative. The reason for that is because BlackBerry was really unable to keep up with the times. BlackBerry is an old company, and its shares have really been dead money for years. The company was not really growing at all. This is compared to other companies which, are much newer and shinier, like Splunk or Datadog or others. The question that people were asking is, why should I invest in a company that hasn't done anything for years and hasn't been able to figure out its way? While these newer companies over there, they have been growing and they were able to figure it out much faster than this old company has. So why should I invest in BlackBerry? Now, again, to be clear here, I do think BlackBerry is trying to pivot its business to more high growth fields. That said, the past, speaks. Because of the past few years, we have honestly had bad performance. People may be valuating BlackBerry less than its peers because of the bad performance. However, like I always say, the past doesn't really predict the future. Just because you had a bad past doesn't mean you can't turn it around. Again, I'm kind of bullish here on BlackBerry because I think that BlackBerry and the CEO is trying to do a lot of things here. But that said, the operating losses and the legacy of the company may be contributing to the discount that we're seeing in BlackBerry versus its peers. It's really up to you if you think BlackBerry is worth a higher multiple because of its game plan to reposition itself as a data and Internet of Things company. So, with all that said, let's head on into the trading charts to try and find a level or two to buy BlackBerry stock if we want to buy BlackBerry stock. So here we are in BlackBerry's trading charts, and as we can see, here was a spike when we had the frenzy stage of the Wall Street bets, and then since then we kind of fell back down to earth to around this $12 to $14 level here, which correlates to this support level over here. So speaking of support levels, firstly, the first very strong support level that I see, which is pretty obvious, is over here in the $8 to $8.50 level, and here around the $6.25 to $7.25 level here. I like these levels because these are days where the amount of buyers match the amount of sellers, creating a sort of equilibrium and stabilizing effect for the stock price, where everybody all kind of agreed what the fair value of the stock was at the time. Honestly, I don't think that we'll get down to these support levels again, but I mean, it could happen, because honestly, I never thought that BlackBerry would get up to about $30 either. However, I think that because we kind of made a support level here around this $12 to $13 level, we could see some price stabilization around here, and maybe even a small bounce upwards back to the mid and upper teens. However, if we do break this support level, then I think that we will fall back down to this $8 to $9 level. I think if you want to try to step into BlackBerry again to hope for a short-time bounce, I think around this $11 level would be the first place to step in, because I like to get my stocks at the bottom of a support level. But again, we are still kind of highly volatile here. So if you want to invest in BlackBerry, you have to be willing to stomach some volatility. Now, just to cover the other major indicators here, as we can see, this MACD chart here, which is a measure of momentum, we see that we still have some negative momentum here because our short-term momentum, which is the blue line, is lower than our orange line here, which is a measure of long-term momentum. If we start to see the blue line bottoming out here, which means that the derivative of the blue line will be going from negative to zero, that means that we could see a positive shift in momentum, which could be bullish when the blue line crosses the orange line. We also see that the RSI here, which is also a measure of momentum, we see that we are turning slightly positive here as well, which shows that there is some strength in the name. So that was my review on BlackBerry stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching.